Let me paint you a picture. Two teenagers. Same school, same neighborhood. Same broke. One of them spends the next 10 years buying things that lose value, the newest phone, the latest sneakers, eating out every weekend. The other one does something most adults never figure out. They invest. With nothing, fast forward a decade and that second person. They're sitting on a portfolio worth over $100,000. The first one, still wondering why their paycheck disappears before the month ends. Here's the most terrifying thing I can tell you right now. Every single day you wait to start is a day you are literally paying with your future. And if you think you need money to start investing, you've already been lied to. Stay with me, because what I'm about to break down will change the way you think about money forever. Here's what nobody tells you in school. The system is not designed for you to build wealth. It's designed for you to earn money, spend money, and repeat that cycle until you retire broke at 65. And I know what you're thinking. I'm young. I'll figure it out later. That sentence right there has robbed more people of their financial freedom than any stock market crash in history. Here's the cold, hard truth. According to a 2023 Federal Reserve report, nearly 40% of Americans can't cover a $400 emergency without going into debt. These aren't lazy people. These aren't uneducated people. These are people who simply never learned the rules of the money game and started playing too late. The good news, you're here, you're early. And that is your unfair advantage. But before I tell you the how, you need to understand the why, because once you see this clearly, you'll never look at money the same way again. The real reason most young people never build wealth isn't because they're broke. It's because of something far more dangerous, and I'll reveal exactly what that is right after I show you the foundation you need to build first. Here's what I promised you, the real reason most people never build wealth. They invest in everything except themselves. Before you put a single dollar into a stock, an index fund, or a crypto wallet, you need to become the kind of person whose investments actually work. That means three things. Number one, financial literacy. And listen, this is free. Platforms like YouTube, Coursera, Khan Academy, Investopedia, they're loaded with free courses on budgeting, investing, compound interest, and wealth building. You have a smartphone and a Wi-Fi connection. That's all you need. Wait, are you seriously telling me the key to building wealth is watching YouTube? Yes. Yes, I am. Number two, your credit score. If you're 18 and older, opening a secured credit card and paying it off every month is one of the smartest $0 moves you can make. A strong credit score is your financial passport. It determines the interest rate on your first car, your first apartment, your first business loan. Start building it now before you need it. Number three, your mindset. Wealth is built slowly by people who think long-term and destroyed quickly by people who think about right now. The average millionaire built their wealth over 32 years of consistent, boring, disciplined investing. Not overnight. Not one lucky trade. 32 years. If that sounds like too long, I promise you the alternative is worse. Alright, let's talk strategy. Because how do you invest with $0 isn't a trick question. It's a real legitimate approach, and here's exactly how you execute it. Strategy number one, invest time before you invest money. Every hour you spend learning a marketable skill, coding, video editing, copywriting, social media management, is an investment that compounds one skill, one client. $100, that is the seed capital for your entire financial future. And before you say, I don't have a skill, you have a phone, you have Google, and you have time. That's more than most self-made millionaires started with. Strategy number two, micro-investing apps. Once you have even $5, and I mean literally $5, you can start investing. Apps like Acorns, Stash, and Public allow you to invest in fractional shares of real companies and diversified index funds with no minimum balance. Acorns even has a roundup feature. Every time you buy a coffee for $3.50, it rounds up to $4 and invests that 50 cents. 50 cents a day sounds like nothing. 50 cents a day invested for 30 years at an 8% average return. Over $27,000 from dollars literal pocket change. Your spare change has been secretly trying to make you rich this whole time and you didn't know. Strategy number three, index funds. The boring strategy that actually works. You don't need to pick stocks. You don't need to watch charts all day. You don't need to understand crypto. You just need to understand index funds. An index fund is a basket of stocks that tracks the entire market, like the S&P 500, which represents 500 of the biggest companies in America. Over the last 50 years, the S&P 500 has returned an average of about 10% per year. Even Warren Buffett, the greatest investor alive, has told average Americans that the best investment they can make is a simple, low-cost S&P 500 index fund. If the world's greatest investor is telling you not to overcomplicate it, maybe don't overcomplicate it. Strategy number four, the Roth IRA. The most powerful tax advantage you've never heard of. Here is the single most underrated financial tool available to young Americans. The Roth IRA. Roth IRA lets you invest after-tax dollars now and withdraw them tax-free in retirement. That means every dollar your money earns over decades of compound growth. The government doesn't touch it. You can contribute up to $7,000 per year. And the earlier you start, the more jaw-dropping your tax-free returns become. Someone who opens a Roth IRA at 18 and contributes consistently could retire with over $1 million in tax-free wealth. Someone who waits until 35 to start, they'd need to contribute 3 times as much to hit the same number. And now we get to the part that ties everything together. The one concept that separates people who build generational wealth from everyone else. I'm going to show you the most powerful force in personal finance. And no, it's not your salary. It's not your hustle, it's something far simpler and far more dangerous to ignore. Albert Einstein, and yes, I know everyone uses this quote, but that's because it's devastatingly true, allegedly called compound interest the eighth wonder of the world. Here's what compounding actually means in plain English. You invest money. That money earns a return. Then you earn a return on your return, then on that, it starts slow, painfully slow, and then somewhere around year 10, year 15, it doesn't just grow, it explodes. It's basically the financial equivalent of a snowball rolling downhill, except the hill is 40 years long and the snowball turns into an avalanche. Let's make this real. If you invest $100 a month starting at age 18, at an average 8% annual return, by age 65, you will have contributed $56,400 of your own money. But your portfolio $525,000, that extra $468,000 is not money you earned. It's money your money earned for you while you slept, while you lived your life. Now here's the fear part, the part I need you to sit with. What if you wait just 10 years? What if you start at 28 instead of 18? Same contribution, same return, your portfolio at 65. $228,000 lost nearly $300,000, not because you made a bad investment, but because you waited a decade to start. That is the price of hesitation. That is the cost of I'll do it later. And here's the most powerful part of this whole conversation. You don't need a trust fund. You don't need rich parents. You don't need to win the lottery. You need time and consistency, both of which you have right now more than you'll ever have again. So let's recap because I want this to stick. Step 1, invest in yourself first. Learn the language of money, it's free. Step 2, build your credit early. A strong score is financial leverage. Step 3, start micro-investing immediately, even with $5 using apps like Acorns or Stash. Step 4, open a Roth IRA as soon as you have earned income. Let the tax-free compounding work for decades. Step 5, keep it boring. Index funds, consistency, long-term. Here is the truth that nobody in your school, your neighborhood, or your social media feed is talking about. Wealth is not a destination. It's a habit you start today. And the teenagers who understand that, they become the adults everyone else wonders about, the ones who retire early, the ones who travel freely, the ones who build something and leave it behind. That can be you. It has to start now, not next year, not when you get your first real job, not when you feel ready now. If this video gave you even one insight that shifts how you think about money, I need you to watch the video that's appearing on your screen right now. It's about the power of compounding, and I go deep on the exact math behind how ordinary people build extraordinary wealth over time. Because understanding compounding conceptually is one thing, seeing the actual numbers, that's when everything clicks. Trust me, you don't want to miss it.